Today we will do an in-depth analysis of Anant Raj Limited as of 29th of Oct 2025. This video is for education and information only. It is not investment advice or a recommendation to buy, sell, or hold any security. I'm not a CB registered advisor or research analyst. The video may contain errors or omissions. Do your own research and consult a licensed professional. Let's talk about company. Anant Raj Limited is an Indian real estate developer listed on the National Stock Exchange and the Bombay Stock Exchange under the symbol ANANTRAJ. We're analyzing the company as of 29th Oct 2025. The business began in 1985 and focuses on property development across North India, concentrated in the National Capital Region, Delhi and Gurugram in Haryana, with additional projects in Rajasthan and Andhra Pradesh. Over time, the company has delivered more than 20 million square feet across housing, commercial offices, IT parks, malls, and hospitality. In market cap terms, this is a mid-cap name at roughly 22,500 crore, around a share price of about 625. Let's talk about what the company does. The core of Anant Raj's business is the development and sale of real estate, residential plotted townships, group housing apartments, premium independent floors and villas, commercial office complexes including IT parks, retail space, and select hospitality assets. The flagship township is Anant Raj Estate in Sector 63A Gurugram, combining plotted development, floors, villas, and upcoming group housing. The company also owns some rental-yielding office and IT park assets, plus hospitality properties. In the last few years, a new pillar has been added, data centers, starting with Manesar, Haryana, and expanding to Panchkula. Let's talk about products and revenue mix. Think of 3 product buckets. First, residential plotted developments, independent floors, villas, group housing towers, and affordable mid-income housing in markets like Gurugram, Neemrana, and Tirupati. Second, commercial and mixed-use, offices, IT parks, and retail blocks embedded in larger townships. Third, hospitality, smaller-owned assets with modest contribution. For reporting, the company currently classifies under a single operating segment, real estate. Practically, the bulk of FY 2024-25 total income, about 2,100 crore, came from development and sale, with other income near 40 crore. The data center business is transitioning from project execution to monetization. Manesar's first 6 megawatts was commissioned in FY 2022-23. Management has previously guided to 21 megawatts at Manesar and 7 megawatt Panchkula, 28 megawatts in total, targeting operationalization by end 2024, with revenue scaling through FY 2025-26 and beyond. Let's talk about stock performance post-listing. Since listing on 27th of Sept 2006, the stock has seen full real estate cycles. Over the last 5 years through early 2025, the share price rose sharply, roughly plus 1,800% to 300% depending on start date. In calendar 2024 alone, the stock advanced about plus 175% versus roughly plus 13% for the Sensex. In Jan 2025, it corrected around 29% in a month amid profit-taking, and in mid-Sept 2025, announcement of a qualified institutions placement, QIP, with a floor price near 696 was followed by a one-day decline of roughly 4 to 5%. By late Oct 2025, the share traded close to 625, about 34% below the 52-week high near 948 and about 8% lower year-on-year. Let's talk about revenue trend. Consolidated total income increased from roughly 1,005 crore in FY 2022-23 to 1,520.7 crore in FY 2023-24, about 51%, and to approximately 2,100 crore in FY 2024-25, about plus 38%. That implies a 2-year CAGR around 44%. On a trailing basis into FY 2025, total income sits around 2,100 to 2,180 crore. There was no revenue dip in the last 3 fiscal years. FY 2020-21 was the notable down year due to COVID-19 impacts. Let's talk about new products or services. The most significant addition is the data center vertical. An initial 6 megawatts at Manesar is live. A program to 28 megawatts across Manesar and Panchkula was targeted by DEC 2024. The company also signed an agreement with TCIL to layer cloud services on top of co-location. On real estate, the launch engine remains active. 2 group housing projects of about 4 lakh square feet each, and roughly 6.5 lakh square feet of independent floors in Sector 63A were indicated for current and coming quarters. The near-term launch pipeline is on the order of 7,000 crore in GDV, with another roughly 10,000 crore potential GDV on the remaining Gurugram land bank beyond that. Let's talk about order book or backlog. Developers don't publish an EPC-style order book, but sold inventory under construction and upcoming launches provide visibility. Gurugram phases sold out quickly. Plots from the July 2022 launch were fully booked by March 2024, implying a sold backlog that recognizes over-construction milestones. Multiple phases are slated through FY 2025-26, with mid-income projects in Neemrana and an affordable project in Tirupati. The 28 megawatt data center capacity is planned to start monetizing into FY 2025-26. Let's talk about EBITDA trend. EBITDA rose from roughly 245 crore in FY 22-23 to about 371 crore in FY 2023-24, about plus 51%, and further to about 532 crore in FY 2024-25, about plus 43%. The trailing profile mirrors FY 2024-25 given recency. Let's talk about EBITDA margin trend. Consolidated EBITDA margins have been around the mid-20s, approximately 24 to 25% through FY 2023-24, and near 25% in FY 2024-25. Stability reflects a low legacy land cost base and in-house construction capability. Mix and input cost moves can create quarterly noise. Let's talk about debt to equity leverage has been reduced materially. Net debt moved from about 1,098 crore to about 290 crore by March 2024, and to roughly 50 crore by March 2025. After the Oct’25 QIP of 100 crore, the balance sheet shifts to net cash. Net debt to equity is approximately 0.0x. Interest expense dropped from about 34.6 crore in FY 2023-24 to roughly 11 crore in FY 2024-25, about minus 68%. Let's talk about cash flow conversion. Operating cash flow conversion tightened during the growth phase. FY 2023-24 reported operating cash flow around 25.5 crore despite PAT near 266 crore, reflecting working capital and capex investment. FY 2022-23 showed a modest positive OCF near 33 crore. Collections in FY 2023-24 were reported around 1,260 crore. Let's talk about one-year stock price trend. Across the 12 months into late Oct 2025, the stock is roughly 8% lower year-on-year and about 34% below its 52-week high near 948. The main events were the Jan 2025 correction, 29%, and the SEP Oct 2025 QIP at 662 per share. Quarterly prints in Q1 FY 2025-26 indicated revenue up about 25.5% year-on-year to roughly 592 crore, and PAT up about 38% to roughly 126 crore. Let's talk about promoter holdings. In DEC 2024, a promoter entity subscribed to about 13.7 lakh convertible warrants at 730 per share, totaling roughly 100 crore, with 25 crore paid up front. Promoter stake stood near 57.35% in SEP Oct 2025. Changes primarily reflect equity issuance. Let's talk about valuation versus peers. Descriptive, not a recommendation. On trailing earnings at a share price around 625 and TTM EPS near 12.8, the implied PE is about 48 to 49. On price to book with BVPS around 121, PB is 5.1 times. On EV/EBITDA with EV approximating market cap near 22,500 crore and FY 2024-25 EBITDA around 532 crore, the trailing multiple is 42 times. Peer references often discussed by the market. DLF and Godrej Properties have at times traded around the mid-40s to 50 times PE. Oberoi Realty lower in the mid-20s, Macrotech developers in the high 30s to 40 times on some snapshots. For an AV, some broker models estimate Anant Raj as an AV around 750 per share. At 625, that implies 0.83 price to NAV on that estimate. These are descriptive metrics to understand how the market prices growth, margin profile, land bank, and optionality from data centers. Let's talk about variables and risks. Industry cyclicality is high and interest rate sensitive. Input cost risk exists. Pricing and low land cost offer buffers. Capex and working capital needs can create OCF volatility. Policy and regulation matter. RERA, local approvals, tax. Execution is key across multiple real estate phases and a data center ramp. Is the company regulated by government? Real estate is regulated under RERA and local development authorities. Data centers fall under broader infra policy. There is no single sector regulator on pricing, capacity, but taxation, environmental norms, and stamp duties affect economics. Is the business cyclical or seasonal? The business is cyclical rather than purely seasonal. Festive periods can see stronger bookings, but multi-year cycles depend on affordability, liquidity, employment, and sentiment. Let's talk about latest news in the last 1 to 2 months. October 2025 QIP, approximately 1,100 crore raised at 662 per share. Policy discussions around potential long-dated data center tax incentives were in focus. The company scheduled its H1 FY 2025-26 board meeting for early November. Let's talk about analyst and ownership snapshots. Descriptive. Street targets discussed in early mid-2025 clustered near the 975 to 1,085 band. Domestic mutual funds collectively held roughly 4.28% as of September 2025. FIIs around 10.7%, promoters around 57.35%. These figures help understand market participation and liquidity. Let's talk about what to track. Monitoring framework, not advice. Key variables to watch include quarterly revenue, e.g., 500 crore as a directional marker, consolidated EBITDA margin, 24 to 26% range, collections trajectory, progress on data center capacity and occupancy, and any policy clarity on data center incentives. Execution milestones in Gurugram launches and deliveries, and balance sheet position, net cash leverage, are also important tracking items. That's the complete descriptive summary. An NCR-focused developer with a legacy land base, consolidated EBITDA margins in the mid-20s, total income rising from about 1,521 crore to roughly 2,100 crore year over year, EBITDA up from about 371 crore to roughly 532 crore, finance costs down about 68%, net debt near zero post the October 2025 QIP, promoter ownership around 57.35%, FIIs near 10.7%, mutual funds near 4.28%, and a new data center vertical with 28 megawatts targeted near term.